Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, November 2nd, and this is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor. I cannot give you individual financial advice. Anything discussed here is for informational and entertainment purposes only. Please do your own due diligence on any ideas discussed here. It's your money, it's your responsibility. Okay, let's get started. As I've said before, look, I'm not the most educated or, you know, coming up with all these super duper ideas. I follow what Munger said, seek out the best minds, listen to what people smarter than you say, and if it makes sense, use it. There's nothing wrong with doing that. No one can think up everything on their own. I've been criticized for that, but I think that that's an excellent way to do things. I would rather be in a room with people that are smarter than me so that I could be exposed to their ideas and their thinking rather than be the smartest person in the room. And I think that with the internet and just the proliferation of mediums for information exchange, you just have a plethora, unlimited amount of ideas out there and viewpoints. And so obviously I think it pays, not every information source uh, is worthwhile. In fact, most of the stuff out there is junk. But I do encourage people to curate, whether it's on X or Substack or what have you, have this curation of people and talent that you trust, uh, that you've learned from, and you can continue to learn from them and get ideas. And then these things kind of overlap, and it kind of goes back to that whole idea of, building that lattice work of knowledge, and that knowledge, compounds over time, just like money compounds. So, or just like going to the gym compounds for health effects. So one of the people that I like listening to is the folks down in Tampa. It's Coppernick Advisors, I think is what it is. Basically, they're a money management firm, but they spend a lot of time writing just like other folks do and putting their information out for free. They manage money. They have a bent towards value investing and buying things that are cheap and out of favor, which resonates with me, obviously. So they just recently had their third quarter conference call. It's like an hour long. You can go to their website and check it out. I'll put a link to their website. They have a lot of great writings there. I've mentioned them before. So I'm going to go over a couple charts they had in their presentation. One of the things here is this chart here talking about inflation and price rises over an 80-year lifespan. And so, I put here as a title of the slide, the insidious nature of inflation. And this is something that most people just don't get. I was watching on X. They're getting into these things now where I don't know. It's like I don't know what you get, like this person sits there for like an hour and people come up and sit every 5 minutes and they argue with you their viewpoints or what have you. And I saw this younger person, these were college students or younger adults. And one of the things that they were discussing was the conservative person was talking about the fact of the inflation that we've had since the pandemic and how it's raised prices for people and how it's had a, extraordinary effect on the lower classes, working class people. And so this kid came up and he's like, no, 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 inflation's down. You're wrong. It's down. It's come down from 9 to 2.5%, what have you. And this is a common mistake that people make. Over the last 4 years or what have you, depending on who you want to listen to, we all know that we've had price rises of anywhere from 20 to 30%. However you want to look at it, that's a lot though, and we know why it was caused because the excessive money printing, federal deficits. I talked about that last week with the MIT study that came out that they said that, in fact, it wasn't necessarily the supply chain effects that caused the inflation. It was the deficit spending and basically sending free money out to people. So that's MIT. If you want to argue with them, I'm not making an appeal to authority. I'm just saying what they said. And so what people don't understand is once you have these price rises, they don't normally, they go up very quickly, as we saw, but they have a tendency to stay there. And so if you have what the person didn't understand was the inflation rate had come down from 9% annually down to 2 or 3%. But that's still insidious over a long period of time. And this chart demonstrates that if you have a just a 1% inflation rate over a typical 80-year lifetime, you're going to have prices go up 200 over 200%. If you have the Fed's target that's reached over an 80% lifetime of 2% per year, you're going to have a price increases over time of 500%, and so on and so forth, as you can see from the chart. I mean, even if you get to 5% a year, okay? Why is this important? Why do I bring this up? I bring this up because, as we've talked about before, the fiscal situation that the West finds itself, in the US in particular, with its debts, with debt going up, with fiscal deficit spending on par with what we spent during a world war, with the fact that we're looking at a tidal wave of hundreds of trillions of dollars potentially of unfunded Social Security and Medicare, Medicaid benefits, retirement, government pensions, all these things, they simply can't be paid. Uh, I'll talk about later in the political section of this as we're coming up on election. I'm all for, uh, Mr. Musk and Mr. Trump talking about having a blue ribbon commission that's going to make government more efficient. We're actually going to create a bureaucracy to get rid of the bureaucracy. What people don't understand because they don't know history and they haven't been around long enough is things have been tried before. There was a guy that I forget his first name, his last name was Figgy. He owned a conglomerate called Figgy International. He wrote a book about debt. This was back in like the 80s, and he was actually on a committee. They had a blue ribbon committee to cut debt and cut the deficit and do all these things. That's very interesting. Everybody knows that there's government waste. Everybody knows that there's government spending, but this entrenched bureaucracy of mandarins that stays there through whatever political party is in power continually increases its budgets. Again, I've talked about the fact that neither one of the candidates was talking about the fiscal situation of the United States. They're not going to do it. They both want to spend money. And so, looking at it from a business perspective, and we can make these more efficient. I was listening to a podcast with Luke Gromen, who I'll put on the weekly uh, free email where I collate and curate various podcasts. You can sign up for that in the show notes. Uh, Articles, podcasts, what have you, that I found interesting for the week. I apologize I didn't put it out last week. There really wasn't a lot of good stuff, so I skipped last week, but I'll be back to the regular publishing schedule for the free email. But Luke Gromen was being interviewed, and he laid it out very, very easily. You're in a situation now, which I've talked about this ad nauseum myself, where you only have a couple options. And so let's go through the options and let's see knowing how the political situation works and how human nature is, what we think will happen and why it's important to pay attention to these things. Because as I've said before, your financial well-being over the next couple decades is going to be incumbent upon the fact that you understand that we've shifted from a low interest rate, low inflation environment to a higher interest rate, higher inflation environment going forward, with all kinds of other little jack in the box surprises for you, like yield curve control, capital controls, things that'll be coming down the pipeline. But let's talk about what our options are. We ran close to a $2 trillion deficit that we added to the already $35 trillion. Okay. Well, it ended up being 35 trillion. The CBO says by within 10 years to 2034, we're going to add another $22 trillion in debt. So we'll be at $57 trillion. That's assuming 2% inflation, no recessions, a whole bunch of things that probably won't happen. And so I suggest to you that it will be higher. We're already in a situation where the government's having a problem selling long bonds. They've moved, as Luke Gromen talked about it, and some other people, you're running a payday. Janet Yellen in the Treasury Department and these folks are running a payday, running the government off of payday loans, selling on the short end of the curve because there's just not enough demand for bonds on the long end because who's going to loan this government money at 4.5% for 10 years or whatever for 30 years when you can see what's happening? So, what are our options? Okay, an immediate and permanent cut to entitlements of 20%. That means Social Security and Medicare cut 20% permanently and immediately. That means at least a 25% cut to the defense budget immediately and scaling it down over time. Does anybody listening here think either of those two things are going to happen? That's what should happen. The defense budget should be cut by 90%. That will never happen. Okay. As a matter of fact, Mr. Trump's going to try to increase defense spending. And nobody's going to go near entitlements until they blow up in everybody's face and there's a crisis. So those things are going to continue to grow like a cancer. Government spending grew 10% last year. Tax revenues grew 7.8%. You see the problem? In the best economy ever, according to the incumbent party. So what's the other options? Okay, well, we can, people talk about raising taxes. These are math problems. You can confiscate all the wealth of the 1% and it doesn't get you anywhere close to where you need to be. So that's not going to work. And so what's going to happen, which is already happening, is you're going to see uh, inflation running at a higher elevated level for a long period of time. The government already has done this in the past. Lynn Alden has talked about this. She's written articles about it, about how we were after World War II, we were at similar levels of debt relative to GDP. And what the government did, in the Federal Reserve and the Treasury, basically running yield curve control for some period of time, basically where you lock bond treasury rates down. You keep them, let's say, at 2.5 or 3%, whatever. Let's just use the 3% as an example. And you allow the inflation rate to run at 4, 5%, and you basically inflate the debt away. And you say, thank you very much, bondholders, for your contribution to the debt. They just confiscate wealth. Then you say, well, nobody that's rational will participate in the bond market once they see that happening. That's correct. That's where you forget about the Congress. The Congress makes laws. The Congress has the ability to appropriate money and create agencies and laws and regulations. And so it's very easy to pass some legislation that says, and they always call it some, Orwellian term like it's a beneficial thing. The patriotic bond buying legislation of 2030, or I don't know what they're going to call it, where if you have a pension plans, insurance companies, people that have long-term, they have to match their liabilities, to assets for payouts in the future. They'll just make them via legislation and regulation, force them to put a certain amount of their capital into these bonds. Now the bonds will be paid out. They won't go bankrupt. People with a reserve currency or the ability to print their own money in their currency can pay out. So they'll pay out. Greenspan said this many times gave this lesson to Ron Paul when Ron Paul challenged him back in the 80s and early 90s when they were sparring at Federal Reserve congressional testimonies. So Mr. Paul was not an idiot. He could do math and saw this. So that's what will happen. And so you're going to be, this is where the thesis comes from of my thesis about a long-term environment that you're going to be living in with elevated inflation rates. Of course, nobody's going to buy the long bond if the inflation rate's running at 4.5% or 5% and the bonds are selling for 3. But if you're in a 401k plan, they can pat the SEC, however they do it. I don't know, regulatory body, they'll just force you to keep your money there. And then if you say, well, I'm out of here. Well, they've already over the years, as I've explained many times, made it more and more difficult to get money out of the country. They did that deliberately. I've told the story. When I was a younger man, maybe 20 years ago, I had the fortune to, I have a lot of contacts. I know a lot of people, and somebody said, hey, you might want to set up a bank account in Switzerland. There's a lot of advantages to having a bank account in Switzerland at the time for US citizens. So if you say that, you know, that you want to have a foreign bank account, most people will say, well, why do you want to do that? I mean, that's what the hoi polloi or the bleacher bum or trailer park resident that doesn't even have a savings account will say, because they've been indoctrinated to believe that anybody that banks outside the US is an arms dealer like Adnan Khashoggi or some kind of drug dealer. And that's how they've basically set the narrative here in the United States. They've made it over the years more and more difficult for US citizens to have foreign bank accounts because they don't want you they want to make it more difficult to get your capital out of the US or to transfer your capital around. It's interesting. This is one of the things that supposedly the neoliberal world order talks about, the free movement of people and capital, but that's not actually true. There's a free movement in people, as we've seen on the southern border and into Europe, but not so much with capital. And so they don't necessarily come out and just ban you. They don't, you can have a foreign bank account. It's not against the law, but there's a significant reporting requirements for not only you, but the foreign institutions. And so so I will tell you the story again of what happened because it's relevant to this conversation. So I had this Swiss bank account and you're assigned a personal banker, not some putz like over at some 23-year-old kid at Wells Fargo. I'm talking about somebody that's sophisticated in wealth management and knows what they're talking about. And you have periodic conversations with this person for planning purposes. Not every month, but a couple, depending on how big your account is and what you want to do, at least once a year. And so I was working overseas. This is back in the BlackBerry days. And this bank account was with a small canton bank in Switzerland. Very highly personalized service. I really liked some of the things that I was allowed to get involved with. So I get an email. You need to call the bank immediately from the banker. So I called him. What's up? Yeah, you're going to have to close your bank account out in the next 30 days. This is going back at least 15 or 20 years, I think. Maybe it's 15 years ago. I go, what's up? They said, well, the government of the United States keeps passing more and more regulations and laws such that we have to comply. In the past, they never had to comply. They didn't send 1099s to the US and tell the US what you were doing. They used to have secrecy laws in Switzerland. Those have changed recently too. And so it's still your responsibility to deal with your tax authorities in your country. The banks in Switzerland didn't want to do it. They didn't feel it was their obligation and wasn't part of their services. That's your business. But what the government did in the US is they started passing these regulations, and of course, none of these banks were complying. And so, what did they do? Well, they threatened them with being kicked out of the SWIFT system or being penalized in other ways to be that they couldn't, do business in the US, or they couldn't have branches in the US, or all these different mechanisms that were used to force this situation. Now, this was, again, boiling the frog. They didn't just have this massive legislation that came out, it was on the front page. We're going to make it more and more difficult. But the reporting, you could still, and so what the banks did, they self-regulated. We just don't want to, unless, so my situation was, I said, well, what are my options here? They said, well, if you are a super high net worth person, we will work with you. But if you're not, I go, what does that mean? And the number was substantially higher than I had at the time, or even now, that they would make the effort to do that, but they weren't going to make the effort for just, these regular retail accounts. And so I was forced to close my account of no fault of the bank, no fault of mine. The relationship was mutually beneficial. Everybody was, but again, the government inserted themselves into this. And so they've been doing this over time because, as Doug Casey says, he's famous for these quips, which I like, you know, they've been slowly building up this prison nation, you know, and so when they lock it down, if they ever do get in a financial crisis, which you've seen happen in places like Greece and these other people, don't think it can't happen here. If you continue to run the debt up, you will have a currency crisis. You will have a financial crisis at some point. Just because something's certain doesn't mean it's imminent. But you can see the slow burn now when we're talking about inflation. This is where they're going. More inflation, more regulation, more repression. They have no other option. They're not going to do the moral and ethical thing, which is to cut spending and live within their means. For heaven's sakes, this government collects almost $6 trillion a year in taxes and still can't live within its means. Anytime you listen to a congressional hearing, every one of those bureaucrats says the same thing. Well, we've had your agency in here for 30, 40 years, 50 years, and you come back here and there's no progress made on the scope that the agency was created for. Let's use the example of education. And so what does the Mandarin say? I need more money. If you just give me more money, I'll fix the problem. And then they hire more administrators and more people. Then they come back during the next administration when the test scores are down again. What's the problem now? I need more money. If you just give me more money. It's always about more money. And then they create, bigger empire. Nobody comes there and says, do we really even need this? Maybe the states, maybe the local school district should do this with the parents because it's their kids instead of trying to do this. But then nobody's interested in doing that because that's not how things are incentivized. So I'm getting off track here, but this is where we're going. And this is why we're moving from a financialized economy that's happened over the last 40 years back to tangible and real assets. And if you don't understand why we're going to be doing that, and it's not just going to happen on Monday morning, it's going to be a slow process, like the process of disinflation and lower interest rates was a process over, when Volcker started cutting rates and things moved lower over time. There were times where inflation kicked back up, they had to raise rates. You get my point. There's a long-term generational trend change here is what I'm talking about. And if you don't get it and understand it, then it's going to be detrimental to your life. You know, there's nothing, depending on who gets elected, these things are set in stone. There's only two outcomes here. You either become ethical and moral people and live within your means, but a lot of people don't do that. They're spendthrifts. Or you inflate or die. Guess what they're going to choose? Governments throughout history, it's nothing, I'm not saying anything negative about the US government or the people there, as far as, this is what they're going to do because they won't have any other option. These type of things are not politically possible when you're having a 4-year election cycle or a 2-year election cycle for Congress people. They're just not going to do, it's not set up to enable long-term solutions to long-term big problems. You have to have a major crisis first when there's no other option, like you saw in Argentina, but that took, 70 years to get to that point where a guy like Milei gets elected and goes in with a chainsaw because people have finally had enough. But that's three generations of people. And that's not the only country. I mean, my wife, uh, family, friends, when the Soviet Union dissipated, people living in Ukraine went through, I think, at least two hyperinflations there since perestroika. The country doesn't dry up and blow away, but if you don't know what's going on, you get wiped out. And so you don't need hyperinflation, as this chart indicates, over a lifespan. It's the boil the frog again. You don't see it in any individual year. It starts to become cumulative, and you start to notice that things start to deteriorate. You're not making headway. You just saw the recent dock workers and Boeing workers, the unions went on strike, and they're getting, wage increases that come out to 8 to 10% a year over the next 4 to 6 years. You're going to get cost push inflation from that. If inflation is going to go down to 2%, like the Fed says, why do they need these big pay? Well, I think that we all know that, so we're going back to the 70s, back to the future, right? So I wanted to bring this up. This was kind of fun. I remember when I was thumbing through the various National Geographics my grandparents had when I was a kid, they actually put ads in there and they actually had the price of the car in there. So this is kind of a car that I liked when I was a kid. I didn't have this car. I had a Oldsmobile 442 that I fixed up. It was a drag car driving around the high school, big stereo system. That was back in the 80s. I had that. It was a 1972, I believe. Oldsmobile 442 with a 350 rocket. But I like this. I've always liked this AMX or these Javelins and stuff. This is a kind of a neat car. I'll go on a tangent here. I'm probably before I die, God willing, maybe if I make enough money in uranium, I might just buy one of these. They're actually pretty affordable as classic cars still. But anyway, um, they used to put this is a 1970 AMX, and it went for 30 it was actually 33.95. I put 39.95, but it's actually 33.95, 3,395. And you can look this stuff up, kind of fun, just as an example of how inflation and prices rise over time. And you'll say, well, the car that you pay for now, this Lexus or whatever, it has a lot more technology. It's a better car. Well, the basic point of the vehicle is to get you from point A to point B. That's the point. Some wag will come in and say that instead of missing the point that, you could get like a drag car. This car had a 390 cubic inch engine, I believe, with 325 horsepower and would run 14s and a quarter mile off the factory floor. That's pretty decent, you know. And here's a picture of what they look like. They used to call it the Big Bad Max, I think was one of the model number. They had like two models. Anyways, it's kind of a cool car with that fastback. I always like these things. And like I said, that 390 cubic inch, 325 horsepower. It's a pretty slick looking car. Anyway, that was the point I wanted to make. That's just one example. You can go down the list, these comparisons, and they do that in the Copernic presentation, show you the increase and then talk a little bit about that whole Cantillon effect of when you create all this money, which we're going to be doing all these currency units, you don't necessarily know where it's going to go. We've talked about that before also. And so this came from US Global Investors. You see the blue line was the 1966 to 1983 inflation's consumer price index year over year change. Then you see the yellow line, which is the 2013 to 2024. And so are we going to continue down uh, was this the peak uh, of our inflation recently, or this last peak, or are we going to go back to the future? Are we going to reinflate? I would suggest to you, as I've said before, that we've had a respite recently, but I suggest to you that we're, with all of the co all of the countries in the world now cutting rates and liquidity increasing, there's a real risk that inflation could reaccelerate or prices paid accelerate. The inflation is already happening. The money creation is happening. You lower rates, you understand the mechanism of how the central banks lower rates. And then eventually, if we get in a situation in the US where because of the fiscal situation and the levels of debt and the inability to be, sober in our spending, that people start rejecting buying sufficient amount of bonds, and that forces the Federal Reserve to come in and do QE. So we'll see, but I do think that you have, again, I don't suggest we're going to run away to hyperinflation like in, you know, Weimar, Germany or Argentina or these places. This economy is very large and dynamic. So some things will temper it, but you don't need, as I've said before, you don't need to have hyperinflation to have inflation just, whittle your living standard away. One of the things that could be helpful is lower oil prices. I know that the one of the things that I've listened to the Trump people say, and Senator Vance, when they're asked how they're going to lower prices, they don't talk about reining in the Fed, dealing with the fiscal situation. They talk about drill, baby, drill. But I guess the view Vance said, because Trump doesn't really explain things very well, but I get the point, what they're thinking, that energy is such a big input in everything. If we can force energy prices down, deregulate energy, that will have a knock-on effect on prices. I do agree with that to a certain point, but how are you going to make people drill? I mean, you're already in a situation where um, are you going to force them? Are you going to incentivize them to drill and collapse the price of oil? I mean, we already did that, and the zeitgeist has changed in the oil patch to shareholder returns and doing this on a, no one's saying that, yeah, when the Trump administration comes in, we're going to start ordering up all these. I mean, what's the incentive to do that and collapse the oil price? But we may see a situation where OPEC now, they've been cutting their production for a while, and these production cuts are supposed to begin unwinding. Basically, they cut back 2.5 million barrels a day, and they're supposed to start unwinding in December. So we'll have to see if OPEC continues on with that. I think with the economies and PMIs are going to start turning as these rates keep getting cut. Energy demand will increase. I'm not one of these people that believes we're at peak oil demand. Um, but if you over a period of a year add 2.5 million barrels of new supply, will the market be able to absorb it? I don't know. Uh, we'll see. But if they do, and the oil price goes down into the 50s, well, this will be a benefit for the all economies, right? And I'm not suggesting that I'm quite sure that if the Trump administration wins, they will in fact go in and reverse a lot of executive orders that were hindering the energy business. I'm sure they'll replace various regulatory agencies with people that are more pro-energy or pro-fossil fuels, and these will have a certain effect at the margin, but they won't necessarily, you know, be an immediate fix. So I think this has the potential to be even bigger fix. So, sometimes it just pays to be lucky and be in the right place at the right time. So if OPEC does allow these cuts to come back in, what they're talking about the UAE uplift here is the UAE had a deal with OPEC where they can increase over the next year their production by 300,000 barrels per day. So it'll be interesting to see what happens in the next month or so if OPEC extends their output cuts or if they allow these the cut oil to come back, the unwi to begin unwinding the cuts. So it'll be interesting to see and what the effect is in the market. That again, this will be in the context of a world economy that, in my view, is going to begin accelerating due to like I said, the new liquidity cycle that we're in. So, you know, what we normally see in any year is about a 1% increase in oil demand, and we're running about 104 million barrels a day. So another million barrels of demand, maybe if the economy accelerates, 2 million barrels. So maybe they can absorb it. I don't know. We'll see. Again, you're still dealing with depletion every year, and we haven't sufficiently invested. That's kind of a more longer term thing, but something to keep in mind. If you see oil prices going down into next year in the first quarter, so this is going to be part of it. If they allow these cuts to unwind, you only need a slight oversupply at the margin to affect a price decrease. So this is something that I have talked about for a couple few years since I've been a nuclear advocate. Well, I've been a nuclear advocate my whole life. I was one of the lone voices. But one of the problems with the United States and what's hindering its ability to, it's another industry that we're losing because of our bureaucratic morass that we're in and the inability to, get things going, is the fact that every reactor that was built in the US, not every reactor, but quite a few of the reactors, most of the reactors were just like one-offs. There was no standard design like they have, like they're using in China and these other places, where they just crank out the same design, the same parts, and just go, go, go. Okay. There may be even a place where there's places where you may have two or three reactors there, and they're of all different types or different designs. This is not how you lower costs. This is not how you become efficient. This is what we need to do. As I've said before, we need to get to a situation where, you get the whole industry together or the leaders and you say, okay, what are the best designs, two or three best designs? I mean, Canadians have a can-do design, which they use. We have several designs here, AP 1000, whatever, and say these here nuclear utilities or people that want to build these type of reactors, these are the designs. Pick one and go for it. And then you streamline the regulatory environment for that so that you can accelerate this. And then people know, okay, well, if I get into this business and start building whatever, steam generators or whatever parts for the reactor, I don't have to build 50 different types or make bespoke components. And so this is what this tweet was talking about. Says is almost every reactor has been a special snowflake. DOE official on our nuclear call today. She reminded us that 50, quote, first of a kind projects have robbed us of lowered nuclear costs. We have to change our approach. Goes on here, it says on this call, that I guess one of the charts here, that says the lack of learning effects in the U.S. may be in part explained by the construction of over 50 unique reactor designs. Yeah, that's not how you become efficient. That's not how, see, but the problem is here is, this is why people will denigrate, and I'm not an advocate. I'm just telling you an advantage that they have in these more autocratic regimes, which are, not lend itself to a 2 and 4 year election cycle like in the West, is that they just pick a design and go with it. There's a 5 year plan. We will build 25 of these type of reactors. Go order them. Let's go. Let's get this done. And it gets done. You know, and people say, well, our system's better. Very well could be. I don't live in those places. I don't know what day-to-day life is. But I will tell you, as it comes to building nuclear reactors, that's a better way to do it. You need to pick a couple designs, couple, one or two, and say, this is what we're going to fast track. Then people can get everything lined out. And then once you do one package for the initial, then you just copy and paste and go to the next one. I mean, it's not that simple, obviously. Same thing. You make the orders. Hey, we're Duke Energy, we're Constellation Energy. We want to build 5 of these new type of reactors. Boom. They don't, it won't be like Plant Vogtle where the things weigh billions of dollars over budget and companies going bankrupt trying to do this. And then you can build that private partnership and get this thing going because that's where we're going to end up if we want to be successful and stop screwing around with intermittent power sources. which are, in the case of solar panels, 90% built in China. So I've talked about platinum. It's cheap. It's in deficit. I believe that the EV thing is probably not going to take off. It's not going to end up being the end all be all. I think hybrids are growing. I think they're going to make inroads. And when you have a hybrid, which has the fossil fuel engine with also the charging on board, the battery, like BYD has their new car that can go like 1,300 kilometers, I think, without, you know, fueling up. Um, you still need platinum for the catalytic converters for the combustion engine. And so I don't think platinum's going away. I think right now it's basically, as it relates to gold, if you want to use ratios, it's basically at a 125-year high. That means that in my mind, relative to gold, platinum is the cheapest it's been for in 125 years. I've been accumulating physical platinum, just dollar cost averaging into it. I would suggest to you that platinum likely will go a lot higher over the next several years. I don't know how high. I don't know. Could it double? Yes. Could it quadruple? Anything's possible. I don't know. But I do say that when you have it concentrated in the majority of platinum being mined in South Africa and the issues there, it's in deficit. I don't think it's going away. And being these are the kind of things that I'm attracted to. And so when I say this, people say, okay, well, what stock should I buy? Just buy the metal. People want to talk about this Sibiane, whatever, Stillwater. I mean, there's Sylvania Platinum. There's M Plats. These are all, there'll be times to buy those. I think you just buy the metal right now. I think you'll do fine doing that. And as this thing turns, because I think I just saw last week some announcements of shutting down some actual production because of the uh, one of the mines I think was being put on care and maintenance. But anyways, this is not like copper or gold or something like that where it's distributed all over the world. So I think it's kind of like uranium, right? The best thing to do is just buy the physical uranium and you'll do fine. Again, my if it goes to 2,000, 3,000, $4,000 an ounce, which I don't think is outside the realm of possibility over the rest of the remaining of this decade, then I'm quite sure that you will outperform the S&P just buying the physical metal. And there will be opportunities to, like I said, buy into these companies, but a lot of them now are struggling financially. There's an opportunity cost for waiting for the turnaround. When we bought uranium stocks when they were super cheap, uh, you had to wait a couple few years. So I just like buying the metal right now. I have these other companies on my watch list. I pay attention to their reports, but I'm in no hurry to go in and bottom fish these things. I want to see them base. I want to see them, break out. I want to see, and I want to see the platinum price breaking out and moving higher deliberately. Then maybe I'll move in there. Maybe I missed the initial move, but that's fine with me. But I just wanted to point this out of how cheap platinum is relative to gold right now. And some people will say, well, the reason why it's cheap is because combustion engine cars are going away. Well, that's your view. Maybe that's true. I don't know. Uh, but we'll see. I wanted to point this out. That's why I kind of pay attention to the news. You never know what's going on. It's like alumina prices soared to a record high. I mean, no one, kind of talked about that. What's alumina? Well, you have bauxite, which is mined and it's, refined into alumina, ends up being aluminum, right? So, there's been some supply disruptions this year. Just pointed it out to the fact that, there's always going to be opportunity. Things are going along fine, and all of a sudden, boom, you have some supply disruptions in Australia, and I think Guinea is the other places where they mine a lot of bauxite, and prices double, in a month or two. So it doesn't help that, having sanctions on Russia, which is was a big aluminum producer. And so it's not necessarily you got to think about it's like China. I was like, well, what about China? Well, China refines a lot of aluminum, but they don't have a lot of raw materials of the bauxite. So this could be a problem going forward because you got to refine the raw material and then you can refine it into aluminum. So just a tweet here to remind, I like to remind people of things. Title of the slide, got copper. New copper discoveries are becoming increasingly rare. There were 113 from 1990 to 1999. There were 95 discoveries from 2000 to 2009, and only 16 discoveries from 2010 to 2019. During this time, ore grades have also dropped from 1% to 0.53%. A major supply deficit is looming. Position yourself accordingly. So I've talked about this before publicly. I don't really have in the portfolio any really like dedicated copper stocks. I've talked publicly about Glencore. I like Glencore just because they have a lot of copper. They also have a lot of coal. They recently had their shareholder meeting where they asked the shareholders if they wanted to divest the company to divest their coal. They said no. So I like that. I've always liked Glencore. And so I think, with a commodities bull market, you'll probably do fine there. Uh, I also like a company like Amerigo Resources, right? What do? They don't necessarily mine copper. They just treat the waste dumps of the Codelco mine, one of the Codelco mines in Chile. And so this is just all after these miners, the state company Codelco treats the ore, they build up these waste dumps. Well, there's residual copper in this waste. And so this stuff is built up for decades, and Amerigo's businesses just use these water cannons, blast the waste. It turns into a slurry. They get the slurry, run it through a processing plant, and extract, extract the requisite or the contained remaining copper and molybdenum, and they are able to do this successfully. Obviously, it's at current copper prices, they just came out with earnings, I think, a couple weeks ago. They're cash flowing nicely, and they just paid the normal dividend and a special dividend, which at the current share price is about a 9.2% return. So you get a 9.2% dividend yield on an asset that will cash flow will track higher as copper price goes up. It's not something that's going to be a 10 bagger, but it's a way to play copper and actually get money, get a dividend, get a return, not necessarily a speculation. This company basically, if copper drops into the threes, it doesn't work very well. Copper prices around where they are now or higher is where Amerigo works. So something you might want to take a look at, ARG on the Toronto Exchange. Not a recommendation, just an observation. I have it in my one of my portfolios. It's not in the AIA portfolio. It's just something I mentioned publicly. So I want to talk about this. I've talked about China many times. I was one of the, I'm not saying I'm one of the, I recognized that it was tremendously undervalued over a year ago. As I've explained many times, why was I hesitant to buy into the China being cheap? I like to buy things that are undervalued. But I was hesitant because just because something's undervalued, what's the catalyst for it to turn, right? Um, because China's been cheap for a while. Now, there's a lot of people that have a negative connotations about China, especially in the West. Our media, our political class recognizes China as a rising challenger to the hegemon, and particularly in the Pacific. And so instead of looking for positive ways to collaborate with China, we want to treat them as an enemy, call them our greatest enemy. That, you've heard all the stuff. And so I was hesitant to buy into China or look at it being undervalued because I didn't want to be in a situation where, when I have the Chief of Naval Operations telling the Navy to prepare for a war with China by 2027, this is probably going to lead to sanctions and all kinds of stuff prior to that. And I didn't want to be in a situation where I was in Russia, where everything was going fine with my Russian stocks, and the West decided to sanction Russia, and basically all that stuff was stolen. Okay. And so I wasn't able to sell it. And well, it's a long, the story. But as Mr. Keynes said, when information changes, sometimes you need to change your view. Yeah, he was questioned by somebody about some view he had changed, and he said that when the information changes, I change my views. What do you do, sir? And so I think I've taken a different tact as I've looked at different things. The information has changed. Uh, Looking at trying to get away from the Western theme about, the CCP is the biggest evil in the world. We have, it's a communist regime, top down, you know, all, Team America, we're democracy and capitalism. I mean, that's really not true. I knew that before. But then again, what was the catalyst? Well, we've talked about before the big stimulus recently. And another thing that got my interest was I'm a subscriber to the Harris Kupperman. He has that Cuppies event-driven monitor service. And one of the perks of the service is that every month he brings on some kind of guest, usually friends of his, pretty incisive people that kind of know what's going on. And last month, October, he had Louis Vincent Gov on, and there was like a 2.5 hour discussion about China. Uh, Louis Gov lives in China. He's been in China for many years, and he has a different perspective on it. And when he had a slide deck, which I can't really share, he did share an article online that he wrote that was also presented uh, at the presentation, which he has made public, and I'll put a link to it. And I have a few blurbs here also, but basically, uh, it isn't what we have been told, and the way that the presentation and the way he described it, not just him, but other folks that I have listened to, we talked about the CEO of Ford Motor Company coming back. We talked about that last week's video or the week before. I mean, he got a lot of static because he got one of the cars from China and brought over because he said it was a better car than, than, I even talk about here in a minute here. But anyways, I will, yeah, this is the name of the article, Prejudice in China. You can see at the bottom of the slide. I'll put an actual link in the show notes. You can go read the entire article. It's fascinating. But he also showed a chart from a slide deck, which I can't produce, um, showing, the real estate market. They made a conscious decision to clamp down on real estate several years ago. It just didn't blow up. They caused it to kind of blow up. But simultaneous to that, they started funding and pushing for more of an industrial policy. That's why you've seen them get into the dominance of basically being, I think, the largest car exporter in the world now. You see their dominance in EVs. Uh, 90% of solar panels are produced in China. I can go on and on and on. It's not a place where if you have a view of China that they're not capable of producing um, good equipment or good products, you're wrong. Another example I talk about in this week's newsletter, this month's paid newsletter, I go into more in depth in this uh, and why I changed my view and actual additions to the portfolio to take advantage of this. But if you're interested in that, you can sign up for the paid newsletter. But you know, basically, you'll read this in the article if you want to. I suggest you read it. It's really well thought out. And again, this is a person that lives there. This isn't just some guy in a think tank or somebody that thinks they know what's going on or somebody that has a biased view because, you know, we good, they bad, that kind of crap. I'm not interested in those type of analysis or non-analysis analysis. I want to know what's really going on and if there's really, you know, what the potential is. And the potential is that, as I've talked about even in the last month's paid newsletter, one of the reasons why we had 40 years of low inflation and low interest rates was partially because the collapse of communism in the Soviet Union, uh, and the fact that they had to flood the world originally with all these commodities, which forced commodity prices down and inflation down because they needed hard currency, and the only thing they had was all of these resources. And the same thing in China, but they didn't have natural resources. They had human capital. They had 1 billion people that were low wage. So yes, they originally started out making, plastic doggy duty and Minkman schnozzes and low cheap stuff and send it here, low value stuff, low margin stuff, but they've graduated. Perfect example is like I've talked about automobile manufacturing. They're getting into heavy equipment manufacturing now. Talked about solar panels. You see this is happening, and you don't necessarily just see in China. You see, and you go to these other countries in Latin America, Russia, all these places. You see Chinese cars everywhere. It's a fact that because of what's happened, I mean, a product like Apple, for example, and you'll read this in the article, it's not even in the iPhone's not even in the top five of handheld devices in China. Okay. It's the same thing. Audi now is selling cars there in China, obviously, but they took off their four or five four ring Audi symbol off the cars. So, and you can read more about it in the article, but I just want to get these first couple blurbs because I thought this kind of sets the stage. It says, at an investment conference in Kuala Lumpur recently, I caught up with an old friend and GavCal client. Over coffee between sessions, we talked about one of the most visible changes of the last few years in China, the Chinese cars that have so quickly appeared on roads across the continent. This led us to the comments made in September by Ford chief executive Jim Farley. Farley returned from a visit to China, and he told the Wall Street Journal that the growth of the Chinese auto sector poses an existential threat to his company, and that, quote, executing to a Chinese standard is now going to be the most important priority, unquote. Not EV production, executing to a Chinese standard. So is the CEO of Ford Motor Company saying that the Chinese now are the leaders in automobile manufacturing, that their standard? Well, that's basically what he's saying. And that it poses an existential threat to his company. Certainly is happening in Germany, which is being exacerbated. Their automobile industry and all that wealth that was created around that manufacturing, Mercedes, Audi, Porsche, Volkswagen, okay, is now being destroyed with self-inflicted gunshot wounds by morons and pygmies, intellectual pygmies, by the intentional destruction of the German economy or the whole European economy by, you know, cutting itself off from cheap energy and raw materials. Brilliant. So you can read the article. Like I said, I'm changed my mind. I think there's ways to participate because I think this is going to be at the minimum. Okay, we've had these things in before where China's come in. I mean, they're basically telling you, yeah, there's a even in the I'll put it in the free email this week, but also in my paid article about this. I put the David Tepper, buy everything China video that he on CNBC. You should check that out. He kind of talks about all the themes. So even if we just get 100% pop over the next 18 months in Chinese stocks, just based on stimulus, that's good. But we could conceivably be on a something that could go a lot longer and heavier and higher. And so there's a potential for a multi-baggers here. The more likely outcome is they do the stimulus thing, and you just get a short-term year and a half, 100% return in some of these stocks. Chinese stocks double. The other thing that's kind of changed my mind is um, Trump has a very good chance of winning the election. I don't know who's going to win. It's unknowable. Right now, it's very close. but I think he's going to cut a deal with China. I think there'll be, somebody suggested they, be because he's a deal maker and you got to make a deal. I mean, we're not going to have, if you have somebody like Trump and you're not going to have a war, you're not going to have the sanctions. Yes, there'll be tariffs, but I think there'll be a Mar-a-Lago Accords or something. I don't know what they'll call it. Well, they'll meet and they'll cut a deal because that's what you got to do. You got to get a deal. Otherwise, nobody's going to benefit. And, we're just not in a position where we can they have such a head start on us now. I don't know how you catch up. And we have a lot of problems here in the US. Yes, we have a very, very good entrepreneurial class, very technical, but, in certain things, yes, and other things, no. We don't have a trained workforce. We don't have a pipeline to get people trained. We have a lot of other issues. So you got to get a deal. And I think he will get it. And if he does, then I think that's how you could have multi-baggers. So we'll see. Uh, Check this article out, but this is what I talk about in the uh, November issue of the Actionable Intelligence Alert newsletter paid version. So this kind of ties in. Doomberg recently had an article. It was titled Far From Proven. And a couple blurbs here. I was just talking about Germany and its self-inflicted decimation and destruction of its once stellar automobile industry that continues as it can get to a tipping point, folks, where you will not be able to bring it back, and they're rapidly approaching that in Germany. So this is what Doomberg says. And this all goes back to energy again. You'll find the commonality here. I'll bring it to that point where it goes back to energy and what Mr. Trump is talking about getting the price of energy down because it permeates everything. I've been saying that for years since I've been on the internet. Okay, so blurb from the article. Consider China, a country with little in the way of oil or natural gas, but an abundance of domestic coal. As described in our August Doom Zoom presentation to Pro Tier members, Year of the Dragon, China Through the Lens of Energy, the country's leaders have played their energy cards to perfection. In addition to pursuing an all-of-the-above strategy that includes a massive build-out of hydroelectric dams, nuclear power plants, refineries, and natural gas pipelines that connect to its neighbors, China has been happy to nod along with the West's rejection of coal while gorging on the stuff itself. If you ever wondered how China came to make almost everything you buy, here's your answer. And this is the chart that they had in the article. You see the China coal consumption as a percentage of global total because energy inputs go into manufacturing. You don't conjure this stuff up out of nowhere. I've explained this many times. But what about ESG? What about it? The article continues, a couple more blurbs here. At the other end of the spectrum sit major European economies like the UK and Germany. The former just celebrated the closure of its last coal plant and will soon wonder why all the steel factories left. The latter is the global capital of green energy virtue strutting and is about to feign shock when its energy-hungry domestic automotive sector withers into irrelevance. Germany is just beginning to face the consequences of a lost energy decade. Across all the dimensions that matter to the automotive sector, whether energy, labor flexibility, or willingness to usurp intellectual property norms, the Chinese are pressing their advantages to the maximum. There you go. There are consequences for decisions. Now, there are people in the West, not a significant majority, not even a near majority, very vocal minority that want this to happen. It's not some nefarious plan. They just are goofy people that are uninformed and don't really know what's the consequences. We've had a renewable, what people don't understand is we've had in the past a 100% renewable energy economy. Did you know that? The entire world at one time had a 100% renewable energy economy. It was pre-fossil fuels, and it was described as life in that environment was described as short, brutish, and hard. Okay? People say, what are you talking about? I mean, there's a book I've talked about this, what life was like in the medieval times. Everything was based on solar energy. What are you talking about? Well, you know, the average human can produce about 0.13 horsepower of energy, okay? 0.13. So what does a human need for fuel? It needs vegetables and fruits and meat. You get the meat from domesticated animals or animals you hunt. Where do they get their fodder animals for the most part that take in grass and shrubs and whatever, and what and through processes of photosynthesis, renewable energy, solar energy. I mean, somebody had a meme where they showed a mammoth. It was an artistic rendition, and these prehistoric people throwing spears at it, and said pre-fossil fuel, or it said renewable agriculture or something like that. It was supposed to be a joke. But you get my point? The reason why we've had this proliferation of an easy life, which most of these wackos enjoy also, is because the proliferation and use, efficient use and abundance of fossil fuels. And now moving into the nuclear age. You know, we've seen the progression over time from when we were just, did our own agriculture and using animals. That was 100% renewable uh, existence. And people say, well, John, I'm talking about solar panels and wind farm. I know what you're talking about. How do you get those materials? You don't get them with solar powered excavators and haul trucks and milling equipment. It's all run on diesel. See, these people, we allow children and dummies to make policy and people that live in fantasy land. It shouldn't be allowed, but they don't allow that in the CCP or in Russia. We have a democracy and, all voices are heard. Yeah, the lowest common denominator of moron is driving policy. That's awesome. Anyway, this is what's happening. It's going to continue. Uh, you can live in denial and you'll just get poorer over time. That's what will happen until it's changing. It's starting to change. The politics in Europe and these people that are in power are not going to give up power easily. It's going to get ugly. I mean, for example, and I'll get into this later into the political section. I'll just mention this here though. Mr. Trump going to do what he did before, try to lower prices, as a general way, because understanding of all energy inputs, prices go down, everything, is based on energy, right? And work. Machines do work for us and allow us to do more work than we're capable of doing. We can only do 0.13 horsepower, draft animals or a tractor. When you talk about, a tractor that can do plowing, having a 500 horsepower diesel engine. I mean, you get the point, I hope. So anyway, what I wanted to point out is another thing I'm looking at theme that's going to become more pervasive in the Actionable Intelligence Alert newsletter is this whole AI thing. I'm not playing it from the chip side. I'm playing it from the energy side. And so, this is why I mentioned Murray Stahl and Horizon Kinetics. They kind of turn me on. They get this. They've kind of demonstrated their investment theme to take advantage of that. I think it's a unique spin on it, and it involves buying land banks that are going to be able to take advantage of this because you need a tremendous amount of land. These data centers are going to be in the millions of square feet. They're going to require tremendous amounts of water for cooling of the chips, and they're going to require access to tremendous amounts of power and space, which you don't have. You can only, these things are going to be tremendously huge, and they're just going to get bigger and bigger. And so he's written about this, his firm, and I kind of like the ideas that they came up with. So I'll be talking more about that in the Actionable Intelligence Alert newsletter. One of the things you need to think about is I think ultimately you end up at nuclear, but that's not going to happen in the next 3 to 5 years here in the US. And so gas turbines Natural gas-fired power plants are making a comeback. And I pulled this slide off the recent GE Verona or Vernova conference call or the earnings report, and it's talking about GE gas turbines. And I wanted to bring this up here where they're talking about strong equipment orders with 9 HA. These are the big 7 HA heavy gas turbines, um, and 15 aeroderivative units ordered in the third quarter. Service orders increased 29%. Uh, and so you see how we're going to get this new phase of um, I cut my teeth in this industry when I first got out of the Navy in the late 1990s and early 2000s. In this, they had a big natural gas fire build out then. And so I think we're going to see another one because the rapid need for this base load power is going to come from natural gas. That's going to be gas turbines until that will be the bridge to nuclear. I'm not saying that GE Vernova is a good investment. I have no idea. I'm just pointing out that the orders are increasing and why they're increasing. You can go look at not only that, they talk about um, you see down here fourth quarter outlook, expect equipment orders to accelerate. They also talk about their electrification, or GE does, and also like Eaton around more power plants, more substations, the orders. These things have already run. I've looked at the charts. They're not necessarily the best way to play it, but they're good mile markers to see what's really happening. And like I said, the orders now are starting to accelerate because I can put up a gas turbine plant fairly quickly relative to a nuclear plant that's going to take me 5 years, 10 years to build here in the US. I can put up a gas turbine plant in a year and a half. Or aeroderivatives, which are just, containers. They just build them. And what's an aeroderivative that's built off they're smaller gas turbines that are built off the jet engine, aircraft engine models. The heavy gas turbines are the super huge gas turbines that are like, 100, 200 megawatts. Also, another big company that does this is Mitsubishi Heavy Industries. So, again, I'm not suggesting these are good investments. I'm just saying, uh, if you want to, do we actually see companies investing in building more plants? They're going to be gas turbine plants in the short term. So, I always like to point these things out. Your returns are based on what you pay. Howard Marks says that. A lot of stellar, successful investors have said this. This is a Shiller PE and 10-year forward annualized returns. This is like a log or a scatter thing. So basically, here's your Shiller PE. This is your cyclically adjusted PE ratio. So 5 PE, 10 PE, 15 price to earnings is so the more, the higher the valuations for stocks, typically the returns are lower. So if you can buy, and this basically is applicable across the world. This is just S&P 500 returns data for forward 10-year returns, but it's applicable uh, to international markets also. And so basically what it's showing you is the cheaper that you pay for stocks, the higher your returns are going to be over 10 years. And so if you overpay, here's where we are in 2024. So if you're way up here, your expected annualized returns are quite low over the next 10 years. Now, I'm not suggesting that that's going to happen. That's just some research that's come out recently from various firms, Goldman Sachs and some others. But this is something that I've been a student of for many years. I know Meb Faber wrote a paper about this. A lot of people like to argue with this. This is not necessarily a timing uh, mechanism. So you can say, well, we've been at these higher PE levels for years. So what are you talking about? I'm just telling you what the data shows. But we've also been in an extraordinary period of monetary uh, excess and things like that. So that may have overwhelmed what's happened in the past. I'm just showing you that when, you know, what the data shows over long, long periods of time. The more you pay, the lower your returns. In fact, if you get up into these super high valuation levels where you get up into 35, above 35, 40%, 40 PEs, you're going to have negative returns. And this is also why I point out the GMO forward 10-year returns. They show the same thing over the next 7 years. And so that doesn't necessarily mean it's going to happen. I think with the inflation we're going to get, it may get short-circuited to a certain extent, or you will see the returns shift from the S&P more to tangible assets. I think that's probably what you'll see. But stocks, are probably going to go up just because of liquidity. And if they print enough currency units, again, it's back to Cantillon. Where does the water flow? As we add more water in the headwaters, we don't know where it's going to end up as it moves downriver. Okay, this is the time where if you don't like my political commentary or if you don't want to listen to it, you should go away. I'm not going to answer any more comments in there. If you don't like it, that's fine. Don't watch it. That would be my advice. I don't watch things that I don't like or agree with. If you're the kind of person that's going to come in and say you should just stick to stocks, then you shouldn't be watching. I just laugh at those comments. I like the comments because they add to the algorithm, but I'm not going to respond to them anymore. I stopped doing that like over a year ago. So I'm just warning you. So one of my themes also is major geopolitical events and the decline of the Atlanticist hegemon. Another long-term process. Nothing that's going to happen on Monday morning or by the end of next week. Okay? So whatever you seem to think about the war in Ukraine, I'm not going to get into it as far as my view or what the consensus view is in the West. Doesn't matter. What matters is what's happening. And what's happening is now, as what's happened many times in Russian military history, they, beginning of the wars that they are in, they usually are not prepared. They have a lot of stumbles. They eventually get their footing. They ramp up their society and uh, things change, and then they end up coming on like gangbusters. And that's basically what's happening. I watch the reports every day because I'm self-interested in these things. And Ukraine's losing the war badly. They're going to lose, okay? Basically, everybody's walking away from them. They're cut back the money. I'm not going to go into everything. They're losing. They're giving up ground every day. If you don't understand that, or if you don't believe it, you're just in denial. Okay. Um, and so the special military operation, like was said in the UN by the Russian ambassador to the UN, will continue until the tenets and goals of the SMO are met. There will be no negotiation currently. Okay. We know what the tenets are. Demilitarization of Ukraine, no NATO membership for the whatever remains of Ukraine, recognition that the four oblasts that have been voted to be part of the Russian Federation will be acknowledged by Ukraine and the West as belonging to Russia, denazification of the regime, okay, demilitarization, and the installation of a government that is at least neutral, okay, and does not seek NATO uh, entry. Now, that's not acceptable to the West yet. And so the SMO will continue until terms will be imposed upon the Ukrainians. And that will happen. There will be no more money. The money's being cut back, not even by the U.S. and Germany. Mr. Trump has said if he gets in power, he's going to end this war before. I think we're even past that. There will not be another Minsk. There will not be another Istanbul. Uh, the Russians do not feel that the U.S. is and the West is can be trusted to keep an agreement. Now, I think that we'll see things. People can change their minds. But if you think that the Ukrainians are winning or have a chance to win, you're just not informed or you're coping. It's starting to collapse. Somebody will come back to me and say, well, you were the guy that said it would be over in 3 days or 3 weeks. No, I didn't say that. General Milley, who was the head of the Joint Chiefs said that. Okay. If you don't, that, sitting here talking about, what happened 2 years ago is like the German High Command sitting in the bunker in April 1945 talking about their success in Poland in 1939 or their blitzkrieg across northern France and the Low Countries in 1940. It has no relevance to what's happening right now. It's a historical event. Okay? That's the past. What's happening now? And so the whole idea was put all these sanctions on, kick them out of SWIFT. It was going to collapse the economy. The ruble was going to go through the roof. They were going to have hyperinflation, blah, blah, blah. The people were going to rise up and replace the regime in Russia with a more one that's more, amiable, uh, or was more pliable and was going to, do whatever the hegemon wanted to do. Well, that didn't really work. And so here we are. Russian international reserves, official reserve assets in US dollars, they're making record highs. I don't know if this includes or does not include the 300 billion that was confiscated by the West. I think that'll be part of the terms, though, if the West wants to get a deal that they're going to have to release these funds. Or maybe they never will. I don't know. But so what I'm trying to tell you is it didn't work. As a matter of fact, they had to raise interest rates in Russia because they have an inflation going on because it's a wartime economy and they don't have enough labor. I mean, things are booming there. People say, well, that's propaganda. Okay, I don't believe these numbers. Okay, I don't. Do you believe that, Ugladar fell and these Karakovo is going to fall and all, that they're going to be advancing in northern, they're kicking the Ukrainians out of Kursk. Do you believe that? When do you understand reality? Here's Russian foreign total debt in US dollars. It's at a record low. This is not how the US runs its fiscal house. This is how the Russians do. Not only that, gold reserves are at a record high. Here's military production by month. Tanks, infantry or armored vehicles, infantry fighting vehicles, APCs. Here's artillery rocket systems, short range air defense. All numbers are increasing over time. You'll say, well, they have to because we're knocking them all out. Okay, well, they keep building more. We cannot produce armaments at this level in the West. We can't even produce ammunition to this level that they can. Well, the North Koreans, John, okay, whatever. There's all kinds of Western mercenaries fighting for Ukraine. I mean, what do you want me to say? What's reality? So the bottom line is Ukraine's going to lose. We're at a culmination point, as Clausewitz said. Okay. And the Russians get stronger every day, and the Ukrainians get weaker every day. They have manpower shortages. The West is walking away from this now, crawfishing away. You have the prospects of a president coming into power, President Trump, who already said he's going to solve this problem before he even gets inaugurated. I think it'll be a phone call to Zelensky and say, you better cut a deal because we're cutting off the funding 100% or something to that effect. And so what does that mean? Does that mean a frozen conflict? Saw a video the other day with Mersheimer talking about a frozen conflict. Does that mean, what does this do to the NATO alliance? What does it do to the NATO alliance that Turkey is petitioning to join BRICS? Is the BRICS organization going to allow Turkey to enter BRICS while still being a NATO member? What does it mean in Europe and to the EU that you spent all this money, that the European Commission and the honchos, the neoliberal New World Order honchos in the EU Commission, Ursula von der Leyen and the rest of the stooges, basically sold out Europe, destroyed. I just showed you how Germany's automobile industry is being destroyed. For what? You see the rise of populist parties both on the left and right in Europe in recent elections. Doesn't that tell you anything? What's going to happen? So there's a lot of geopolitical things just happening around this. Everybody's backing away from this now, crawfishing away. There's no more money. There won't be hundreds of billions of dollars anymore. Now, if Miss Harris gets in there, Kamala Harris gets in, I think there'll be status quo. They'll keep trying to gin it up. They'll keep trying to push it as best they can, but they're not able to, where are you going to get the men? We're not going to put NATO boots on the ground. No one is going to have their sons here in the US. We're not going to have a draft and send 500,000 men to fight in the Donbass. Nobody in Europe's going to do that either. So where do you get the people? Where do you get the armaments? We can't make anything in the West. So you got to think about what's going to be the repercussions from this. What's the repercussions? What, if you get a Harris regime, then you're going to have, status quo. Things are going to keep. If you have a Trump regime, I think he's going to cut deals. That's what he does. Somebody asked him about, you could say that this is Putin apologist, Putin stooge. This doesn't matter. What's reality and what does it mean? What are the scenarios that you can put together and what does it mean to financial markets? What does it do to the Atlanticist brand, Hegemon's brand? They're not going to just, you know, even if you get a deal in a frozen conflict, there's still going to be you have these Baltic states, you have these this NATO instigating, you know, you're going to have this constant tension. You could very well have terrorists or incursions from radicals in Ukraine. I mean, I don't know. We'll see. So I think it's something to pay attention to because it's I think it's going to dramatically end sometime next year where this is going to finally get resolved. And I think a lot of people in the West are going to be very, very surprised and disappointed because they've been told that the Ukrainians are winning. All we have to do is just keep, and this is like an existential threat. And if we don't do this, then this madman's going to go into the Baltic states and Poland. There's never said that, and no one's ever wanted to do that. Conversely, you're also going to have, probably, they just tried to do another color revolution in Georgia. Luckily, the Georgia Dream Party won in the Republic of Georgia. Okay. And the president there of Georgia, or the prime minister, I forget what her name is. She's Georgian, but she's actually from France. So it's another one of these stooges. So and then you're going to have, what's the possibility of having issues over in Moldova with another stooge? This was just recently reelected. And the fact that they had the elections there in Moldova, and one of the things was a referendum on joining the EU. But of course, all the diaspora, uh, there's a lot of diaspora in Russia, but they weren't allowed to vote in the election. But the Moldovan diaspora in the West was allowed. So you see, the games will continue, the tensions will continue. So, anyways, I haven't been talking about this a lot, but I think you need to get it on your radar screen because it's really rapidly heading to a big problem. You're getting back basically now to the last big not they're not even big anymore. A couple more fortified cities, and once Pokrovsk, Karakovo, Kupiansk, some of these places, once they fall, which they will, then it's open territory basically all the way to the Dnieper River. I suspect there'll be another big push from the south in the Zaporozhye. It's already started in southeast the bottom part of Donetsk or the southeast part of Zaporozhye. Once Ugledar fell, the Russians have been rapidly advancing to the north and northwest. That will continue, and it's this classic World War II Soviet doctrine, have several incursion points, create an encirclement, and destroy or force the forces trapped in there to surrender. So we'll see what happens, but there's plenty of information people reporting on a daily basis, yet you don't see it in the West. Everybody's slowly but surely crawfishing away. So I wanted to talk about the election that we're going to have on Tuesday. Here's my main issues. I've already talked about illegal immigration. I'm basically against all immigration at this point. I want it shut down for some period of time, a cooling off period. Let's get everything straightened out here in the U.S. Of course, I'm told by the WAGs and the other people, well, we got to have him. I've explained how this can all be done. We can get our lettuce picked without letting, the entire third world peasant class to come to the United States. That's possible. And I don't say that to be mean. I wasn't born in or in the third world country. I'm fortunate. I understand how blessed I am, but that doesn't mean that I'm going to be suicidally empathetic. So that's this is my main issue. Do I think that a Harris regime fixes the problem? No, it'll just keep going because they have a view that, which we've discussed before, that more immigration from the third world means more democratic power. This is what happened in California. You have a one-party state there now that they're destroying because they let all this immigration in and didn't do anything about it. Okay, that's what they want. It worked before. It's not hidden. It's not a nefarious plan. It's evil in my opinion. It's diabolical, but it's rational. Makes sense. They want power. Bring in more voters. Union people, regular working class people don't want to vote for the Democratic Party. Okay, we'll bring in another population and replace you with compliant people, low IQ, low skill, don't know what's going on, and we give them stuff, and then they'll vote for us. What's so hard to understand? And yet people deny it. No, that's not what's happening. That's exactly what's happening. And the other side, so-called conservatives, who have never conserved anything in my lifetime, they're beholden to the U.S. Chamber of Commerce and big business. They want cheap labor too. So, as I've said before, there's no one advocating for me. Do I think if President Trump gets in, he'll do something about it? Yeah, I think he'll deport the worst actors and they'll make a big deal about it. We got rid of all these gang members and sent them back to Venezuela or El Salvador or whatever. But they're not going to get rid of 10 or 15 million people because, again, the levels of violence required to do that will not be acceptable to the American people. And people will just rationalize it. Well, these are just people that want to work. We got rid of the bad actors. Let's call it good. Okay. Demography is destiny, folks. The future belongs to those that show up. Traditional Western populations are not producing children at replacement rates. Therefore, they will decline and go away. And the people that do reproduce and show up, again, the future belongs to those that show up. So it's not just this is to stop the arterial bleeding, but we have to have a full discussion about a lot of other things. Family formation, feminism, the role of men and women in society, a whole bunch of things that need to be unwound that happened during the 30s, 40s, 50s, and 60s and 70s in this country that got us to where we are now. And those aren't even discussions most people are ready even to have. Second thing, no more wars and stupid foreign entanglements. These are my issues, my main issues in order. Okay? Well, former President Trump says he's going to end the Ukrainian war with Russia before he even gets inaugurated. Well, we'll see. A Harris regime will continue the foreign policy. The foreign policy, I mean, Harris will just be a puppet. She will just read what's ever put in front of her. That's what she's been her whole life. She's just been a face that's compliant, sellout. Put me in power, give me the power, so-called power, give me the prestige and the money, and I'll say and do whatever. Doesn't matter. I don't think this person has any positions. He just position is how do I get myself ahead, which is, sociopathic. So I would suggest to you that the war would continue we would continue funding it at some point until the Russians just, more Ukrainians would be killed, more Russians would be killed, more destruction in Ukraine because there's incentives for the political class and the pointy shoes and the military. Again, show me the incentives and I'll tell you the outcome. There's a lot of investment that hinges on this with BlackRock and all these Larry Fink, military industrial complex wants its weapons contracts. The congressmen want their kickbacks from them. Go on Open Secrets. You could see where Lockheed Martin and all these defense contractors send what, who they give their money to in contributions. They don't hide it. They just know you're not going to do anything about it. So we'll see. Do I think what's going to happen, you know, in Israel and Gaza? I think that will continue regardless. We have a government, a Congress that is beholden because of a very, very substantial and powerful Israeli lobby to do the bidding of Israel. And that's not anti-Semitic. That's the truth. We have a current Secretary of State who's a dual citizen of the United States and Israel. Uh, every president that gets in power goes to Israel and kisses the wall. So I think that things will continue the way they are. Now, I think Trump probably will get on the phone and say, "Hey, you got to wrap this up," because he doesn't like killing. I can tell that. He's been asked, "What about this? What about that?" He says, "I want the killing to stop." So we'll see. But I'm not optimistic on either one of these because you have these entrenched interests and mandarins and bureaucrats and people that benefit from all of this, and they're not just going to say, "Well, I just became a moral actor and supporting the military industrial complex. I won't get these hundreds of thousands or millions of dollars in campaign contributions, and then how will I get back in office because I like my salary and my position and getting called to be on MSNBC and give comments and." Be able to lord over witnesses in these stupid hearings that they have and all this waste of time. People are attracted to that. So they're just going to all of a sudden stand up and go, I don't want to be involved in this killing anymore. I don't want to be involved and associated with this because I became all of a sudden a moral and ethical person. No, it's not going to happen. Energy policy. Here's where I am a little bit optimistic. Uh, Trump, and I'm talking about this from my own interests here. We already know what his views are on energy. One thing I will give credit where credit is due to the Democrats is they may be against fossil fuels, but they did embrace nuclear power. So that would be good. Regardless, I think the nuclear renaissance continues. I would like to see it more under a Trump administration because I think it'll be faster and less bureaucratic, but I think it will continue even under a Harris administration. Deregulation. We've heard about the big Elon Musk blue ribbon panel. As I've said earlier in this video, don't count on it. There'll be a lot of talk, but not much action. So the people really don't understand how things work. It boggles my mind. You can't just come in on day one and fire 2 million federal employees. They're protected under certain laws. The public sector unions have spent decades getting laws on the books to preclude that exact thing from happening. Now, you could come in, I think, and he could probably sign an executive order and put a hiring freeze on. I would do that day one. That would make a big thing. No more hiring. Then you could attrit the workforce over time through retirement or maybe even an early buyout. That's what they did in the Navy. When they shrunk the Navy down, uh, when I was in, they did it a sleazy way first. They would try to get people out on like your body fat, you're not compliant with the body fat standard. They were throwing these guys out. Then finally they said to say, hey, will you take a package? And if you don't take the package, we'll just throw you out. Of course, we didn't have a public sector union uh, representing us, but it still took time. But this idea or some other dumb idea I heard, well, just tell them all to go home and then cut off their internet access or their access to their laptop at work. It's not going to happen like that. Okay. You're not going to fire 2 million people. And most of the bureaucrats are in state and municipal workers, not the federal government. But I think you could slowly attrit it over time. You could slowly strangle it. But how much can you do in 4 years? If you went really nuts, they would just impeach you, both sides of the aisle, to be like, this guy's nuts. You can't just throw millions of people out of work. So I think you'll see some things like that that it can be done, but it won't be this dramatic, we're going to cut $2 trillion of spending out of the and waste. We've all heard this before. There was a Grace Commission. There was Henry Figge, I think his name was. I talked about that. They've had these before. They don't amount to jack squat because the permanent political class of the bureaucracies are going to fight you tooth and nail. There'll be lawsuits. The unions will follow. It'll be a big mess. It'll just drag on, and people just throw their hands up. It's not like you can just walk into Twitter and run off 70% of the employees. You can't do that in the government. Now, they've told everybody they're going to do that, but that's the average person doesn't understand how these things work. A lot of these employees are covered under collective bargaining. You can't just do whatever you want in a collective bargaining situation or do like Milei did in Argentina. You just can't do it. So, yeah, deregulation. I think that can happen. There'll be a lot of, things that they can do around that. I think they will do that. I'm hopeful if Trump does get in, that he will appoint people this time, not stooges and swamp creatures, but they'll put actual people in there that will do things because there's different layers of management where they can do things, right? That are political appointees. And let's see what they can really do. The Harris regime will just be status quo. They'll just keep expanding the bureaucracy because that's what they do. That's more political power. Those are guaranteed votes. You created a whole upper middle class of people around the imperial city of those outlying counties around Washington, D.C. You should drive around there. It's a very wealthy area, the upper middle class. Yeah, there's ghetto areas and stuff and rundown, but there's a whole group of people that have benefited from the growth of the federal government over the last 30 or 40 years. You expect them not to, yeah, well, for the greater good, yeah, we should probably go find something else to do. That's not how this works. So we'll see. Fiscal situation, I don't see, they both want to spend money. They're both going to spend money. I don't see it changing radically. I think it goes on, the spending and the debt increases until we have a, financial crack up. We have, I don't know what that means, but I think inevitably, if you spend more money than you take in, we've seen historically what that means for governments. We've talked about that before. So these are my issues. Um, I don't think that voting is going to change much of it, maybe at the margin, but you need radical surgery and chemotherapy on some of these things, and you're just not going to see that till you have a crisis. And so if either one of these people gets elected and pleasantly surprises me, okay, I'll give credit where credit's due. But I just, this is people say a lot of stuff to get elected, and then, what's really politically viable or actionable, you're kind of constrained on what you can actually do as one person or just even a group of people that's in there for 4 years. And you don't even really have 4 years. You have typically you only have a year and a half because you're going to have midterm elections. And typically during a midterm election, the out of party uh, usually makes gains. And there's nothing saying that Mr. Trump gets elected, but what's the composition of the Senate going to be? And what's the composition of the House of Representatives going to be? And how are they going to view some of the things he wants to do? If you have a House of Representatives that's Democrat and it looks like a Senate that's going to be Republican and Mr. Trump, well, legislation starts in the House, right? If you have all blue or all red, well, you can accelerate things, but you're still kind of limited because, I don't see like the scare tactics like Harris talking about doing unrealized capital gains taxes the political class that controls the Democratic Party, which is financial people on Wall Street and big money, they're not going to go for that. And again, that's who controls things. It plays good as envy and jealousy amongst that their base, but it's not going to happen in real life. So that's my view on the election. Yeah, they're going to have an election like they have. This is supposed to be the most important election of all time. They say that every 4 years. It has a minimal effect on your life for most people. So we'll see. That's it for this week. Appreciate the support. Channel continues to grow. Please make a comment, like the videos, subscribe. It helps us out, even if you don't want to subscribe to the newsletter. If you do want to sign up for the free newsletter on Substack, I put that out every week, well, except for last week. And it usually has a lot of good stuff on there that I curate information. And then, of course, we have the paid newsletter where we get into specific ideas on how to capitalize on the things that we talk about in these videos. So that's it for this week. We'll talk to you next week. Stay safe out there.